Our guest says we are in a tricky stretch for markets, and it could shake some less tenacious investors out of their positions. But those who stay level-headed may find excellent buying opportunities in coming months. Let's bring in Grant White, portfolio manager and investment advisor at IA Private Wealth. Thanks very much for joining us. It sure is tricky. I mean, apparently we haven't seen open tariff threats like this in decades.
Yeah, well, I mean, it's tricky because every day there's something new going on out there. I mean, and I think if you look at the market movements, Andy, like top to bottom right now, yeah, like, it hasn't been a great quarter. It hasn't been a great month. But the market movements haven't been anything we haven't seen before. But the news is deafening out there. I mean, there's something every single day almost. And so I think that's where it becomes really, really tricky for investors right now. This is going to be a really tough stretch. I mean, we know tariffs are going to play some sort of role. I mean, it's likely, the conference board came out the other day and said Canada could lose 160,000 jobs over the next quarter or so. And, unemployment could go to 7% and higher and so on and so on. And so this is going to be a really tricky stretch. And I think there's a lot of news in there that's going to be very scary for a lot of investors. But in saying that, these can lead to a lot of opportunities at the same time. And I think for savvy investors, you got to be ready to go. This is buy time.
That's interesting. You are seeing bargains. We'll get to some stock ideas in a second, but you are seeing cheap ideas emerging in the market.
Yeah, I mean, that's what happens in these types of environments, right? I mean, I think you need to be a little bit more creative than what investors have had to be over the last number of years, because it was been pretty easy to buy the Mag 7 in the last number of years, and you're going to do pretty well. And right now, you got to get a little bit more creative. But yeah, there are buying opportunities being created by this volatility. And I think that's actually where good investors are going to do extremely well right now is if you can find those good companies at a great price right now, the next few years are going to look pretty good. I mean, I think, again, this next quarter and this next, maybe next year is going to look quite choppy. But a long-term outlook, I mean, if you're buying stocks and you have a longer-term outlook like you should, I actually think there's going to be some really great opportunities here, and investors should be excited about that.
Let's get to some of your ideas. Fairfax, the insurance giant, and of course, it makes an awful lot of its money from the investment portfolio.
Yeah, so this is one of those, I mean, like I said, I'm excited. This is one of those boring companies that I'm excited about because, I mean, Fairfax just chugs along. What I really like about the company is the cash flow. We've got such consistent cash flow with this company. And I think that right now, especially when, markets are, obviously they're going to be challenging. What I like about it is consistency. This is a very stable company, despite what the short sellers want you to think. I think that story is going to blow over as well. But, this is a very consistent company, and we're getting it at a really good price still right now. It's under 10 times earnings. So all of this today, if you want something stable in your portfolio, you want a good core holding, Fairfax is one of those great companies in Canada, and you can buy it at still a great price today. And I think you're going to be very happy holding it over the next number of years. Plus, it should weather these the volatility storms quite well.
Let's get to your next idea, because it is interesting with Fairfax. It's many years ago since I believe a short seller went after them. Mercado Libre, MELI and NASDAQ, and it's a Latin American Amazon.
That's essentially what it is. I mean, I like to think about this company like Amazon and PayPal combined in Latin America, because that's essentially what it's doing. And I've come on air and talked about this company in the past. It had a tough day yesterday, but this company is doing great. It's seeing incredible growth. I mean, I think like the growth rates are up about 230 or 287% net income surged in Q4 of last year. Free cash flow is looking great, $3.94 billion in 2024. Revenue jumping 37.5% year over year in 2024. So we are seeing a really great growth story. Investors have loved Amazon for years. And if you love Amazon, I think you're going to love Mercado Libre because I think you're actually going to like it more over the next number of years. The other thing I really like about it is the growth opportunities that we see in countries like Brazil and Mexico. There's still a lot of growth for this company in these countries. And so you can do very, very well at this with this one. It's also, I mean, it's not trading cheap per se, but I think based on what the growth is and what we think it can continue to grow at, you're getting this at a good price. I think you're going to be very happy over the next 5 years with this company.
Your next idea, TotalEnergies, the French oil and gas giant.
Yeah, so this is another, I mean, again, a little bit off the board for a lot of Canadian investors. We love our Canadian energy companies, but when you see buying opportunities created, and I think Total is a great buying opportunity. We've, started adding into our portfolios last year. Again, really great company. We've got strong cash flows. Price is great. I mean, it's at about 7.9 times earnings right now. Free cash flow is great, surged 74% quarter over quarter. What I really like about this company is, like, again, if you like oil companies, you're going to like Total, but what you're also going to like about Total is their movement into areas like LNG, liquid natural gas. This is a company that's also thinking about the future of energy, not just being able to sell oil today. And I think in a world where there's a lot of countries who are looking for a little bit of more independence away from countries like Russia, for example, Total is a great option out there. And again, you're getting it at a really great price right now. So I think you're going to do really well with this one. This is again a factor of like the volatility leading to price opportunities. So we think this is a really great time to buy into a company like this.
And finally, CNQ, good old reliable, and of course a global scale company. It's so huge.
Yeah, I mean, closer to home, obviously, CNQ is I think a darling of the Canadian, energy sector, a darling of the Canadian market. Again, what I like about CNQ is if you're worried about any sort of energy pricing volatility, this company has demonstrated that they can generate good profits, good cash flow at much lower oil prices than what we're seeing even today. And so, if you're ever concerned about that, again, with the stories about what Donald Trump's doing with Russian oil or energy and so on, I don't think you have much to worry about with a company like CNQ. I also think that, with what the conversations going on around tariffs and, energy, I think CNQ is actually really well positioned to do well. They're a great producer. And like I said, I mean, I think from a shareholder's perspective, they've been a darling company to own, and I think they're going to be over the next number of years. And so, again, not necessarily trading cheap today. Everybody knows it's a good company, so it's hard to get it on sale. But if you do, we're still adding to it today, not as much, but we will be buying on dips if we do see them as well.
Grant, thank you very much indeed. Grant White, portfolio manager.